Welcome to Insightful Value, where we uncover undervalued opportunities often overlooked by the market. Today, we're diving into Mondelez International, whose stock has pulled back noticeably. Could this be a rare chance to buy into a global snacking leader at a discount? This video is purely informational and educational and not financial advice. If you enjoy clear, jargon-free breakdowns, smash that like button and subscribe to our channel. Mondelez International is a global powerhouse in snacks and confectionery, owning famous brands like Oreo, Cadbury, Milka, and Ritz, with operations across more than 160 countries. The company benefits from strong international diversification, with around 60% of its chocolate sales generated in Europe, which helps offset weakness in its North American business. From a value-oriented perspective, Mondelez now trades at a lower valuation relative to historical peers, but the recent decline reflects serious profitability pressure. In the second quarter of 2025, net revenue rose 7.7% to $8.98 billion, driven by pricing actions across Europe and emerging markets, while North American volumes declined roughly 2.4% as consumers became increasingly price-sensitive. On an adjusted basis, earnings per share dropped 14.5% year-over-year, and full-year earnings are expected to decline by about 10% due to sustained cocoa cost inflation. Gross profit margin fell approximately 6.8 percentage points, and operating margin dropped nearly 3.6 points as escalating input and logistical costs eroded profitability. Although operating income grew year-over-year due to favorable hedging and cost efficiencies, underlying margin trends point toward continuing squeeze. During the first half of the year, Mondelez returned $2.9 billion to shareholders and raised the quarterly dividend by 6%, signaling confidence in free cash flow. However, debt increased by over $3 billion and short-term borrowings surged, raising questions about future leverage management. Dividend development has been steady. Mondelez has a long history of growing distributions, supported by consistent cash generation. Yet floor on yield is modest compared to peer dividend yields in high inflation environments. The recent dividend raise shows commitment to shareholders, but rising leverage needs to be monitored. Key risks include severe cocoa cost inflation. Prices have surged over 200% in recent years, which continues to squeeze margins, especially in North American operations where price hikes face consumer resistance. Volume declines in the U.S. signal elasticity and potential loss of share to private label brands. Currency translation and trade tariffs also pose threats, particularly amid geopolitical volatility. The company's bold pricing strategy may further erode demand if rising healthcare pricing or weight loss drug adoption dampens snacking habits. So why might someone invest now? Mondelez offers global scale, strong brand equity, and profitability leverage through pricing power in Europe and emerging markets. The stock trades below prior highs, and valuation models from some analysts point to upside if margins stabilize and volumes recover. Free cash flow generation and consistent dividends provide investor support. On the flip side, why not invest now? Profitability headwinds persist, especially in the U.S. North American market remains weak, and cocoa costs could remain volatile. Rising debt and increased leverage warrant caution. If consumer price sensitivity deepens, EPS may face further declines, and takeover speculation or M&A risk adds uncertainty. What about the chances of a stock rebound soon? If cocoa prices ease, volume stabilizes, and operating leverage returns, especially in Europe, earnings compression could reverse and investor sentiment might improve. Analysts have set targets in the low to mid-70s range, implying 10 to 15% upside from current levels. But recovery hinges on execution and margin stabilization. At Insightful Value, we provide in-depth analysis of undervalued companies, stripping away jargon and focusing on the data that matters. Whether you are just beginning or a seasoned investor, our goal is to help you make smarter decisions based on fundamentals. For more insights on Mondelez and other potential value opportunities, visit InsightfulValue.com. Thanks for watching. Be sure to subscribe to our channel and like this video to stay tuned for our next deep dive.